Welcome back to Not Financial Advice. I'm Sean, and this channel shows you all of my investments, not only on the green days, but also on the red days as well. And I want to thank you for joining me on this journey, transformation from a lower middle class customer to a six-figure plus owner of businesses who makes money as he sleeps. Today, we're going to be discussing the top pot stocks for 2024 and beyond right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Okay, as always, if there's a stock or an ETF that you'd like for me to review for you, feel free to just drop that ticker symbol in the comments below. Making sure that you're subscribed with the bell notification on. That way you'll be notified as soon as your video is ready. If you're just stopping by, feel free to drop a like on the video. I'd surely appreciate it. It'd be a personal favor to me. Thank you so much. Okay, let's get into it. All right, so it is Monday, January 8th, 2024. It is 1:30 p.m. East Coast Wall Street time, 12:30 p.m. here in the Midwestern United States. And we're going to start real quick with a high-level overview of my portfolio. Today, the S&P 500 is up 0.74%. I am pacing the market up 0.3% for a cool $490 of unrealized gains today. And, to be honest, it's just an awesome feeling. Nothing beats it. I love this game. So let's take a look here at my entire portfolio on Google Finance. As I said, the market is up 0.74% today. The Dow Jones is flat. NASDAQ is getting a bit of relief. What happened coming into 2024 is we had a great Santa Claus rally that ended around December 31st. And then there was profit taking with the NASDAQ up around 50% in 2023, as well as rebalancing by a lot of big institutions. And so between those two factors, the first trading week was a little bit rough, but we're seeing people buying the dip on technology stocks. NASDAQ is up 1.52% today. And then we're also seeing the continued breadth expansion of this second year of the 2023 bull market, rather, with the Russell 2000 small cap index up 1.18%. And so that's sort of the high level update on the indices. And let's take a look at my, really well diversified portfolio. And we're just going to go through the top five gainers and the top five laggards of the day. So Scotts Miracle-Gro couldn't have planned this. It's a stock that we're going to be talking about today, believe it or not. But this happens to be my top performer on the day, up 3.69%. And then we're also seeing Intel as well as Foot Locker gaining. So value stocks, on love stocks, for the most part, higher yielding stocks doing well. Then we have gains in Salesforce. So a potential AI beneficiary, not considered to be part of the Magnificent Seven by any means, but having really strong performance today, up 3.2%. And then a consumer defensive small cap value stock, Boston Beer Company, up 2.43% today. So we are, in fact, seeing the continuation of the breadth expansion in the 2023-2024 bull market. Let's take a look at what's doing poorly on this green day. Not as many companies, but what's lower is Vanguard Energy. This is one that had a good first week of the year, but down 2% today. And then interestingly, we have Curaleaf Holdings and Green Thumb Industries, which are two cannabis stocks, pulling back mildly for how volatile they are, both down around 1.5%. Additionally, we have U-Haul and AutoZone down. AutoZone is one that advanced in the recent days, but not necessarily a rhyme or a reason to the market's modest rally today. up again about 0.75% now. So we're going to get started right away on the topic of today's video, which is the top pot stocks for 2024. So just a quick Google search here, US marijuana legalization. Here's some headlines that we see that come up. College applications rose in states that had legalized recreational marijuana. So that talks about the demographics and the preferences of Americans. Wisconsin governor who called for marijuana legalization says he'll back limited GOP proposal. Wisconsin has been one of the toughest states on marijuana, along with my state, Iowa. But it looks like some progress is being made there. And we're going to take a quick look at this video. I'll ask you to like the video and subscribe to the channel if you haven't already. But what we're going to do is we're going to take a look at a report from Yahoo Finance where they interviewed the Curaleaf CEO, and this was 4 months ago. Let's just listen in together and watch.
Cannabis has largely been in debates, with some thinking it was a gateway drug classified as a Schedule I drug like that of heroin. Now its popularity and use is growing, as seen in a recent Gallup poll in August. And in early 2022, the MORE Act was passed in the House, which, if made law, will decriminalize marijuana federally again. Let's bring in Matt Darren, the CEO of Curaleaf, to give us his insights into running one of the biggest cannabis companies in the world and in the U.S. and the future of the industry here. And Matt, perhaps we just start off with what this reclassification would mean for your business.
Look, this is really a historic development that is extremely encouraging to see Health and Human Services make the recommendation to the DEA to reschedule cannabis into a Schedule III drug. Point will be the removal of the draconian 280E section of the tax code that has really become untenable for our regulated industry. Regulated cannabis companies today pay effective tax rates, in many cases, in excess of 70%, which has really become unsustainable as our companies have grown. So it's going to be a huge catalyst to remove the 280E tax and allow companies to really put those dollars to use into research and development, more investments into capacity improvements, and hiring and creating more jobs across the country.
So that's pretty interesting. We're able to hear that pretty clearly. So what we're going to do now is come over to a chart we can look at together. And if you've clicked on this video, it might be because you've heard how well cannabis stocks have done over the last couple of months. But the story and the journey has been a bit different for others, including myself, who've been invested in this space for a long time. And so this is an ETF. It's an actively managed ETF called Advisor Share MSOS, which stands for multi-state operators. And when it comes to the plant-touching companies within the United States, those are the companies that we'll be looking at in this two-part series. So make sure that you're subscribed with notifications on so you can see my second part of this series, which will be out in just a few days. But MSO stands for multi-state operator. And so these plant touching companies, very few of them, if any, are just in one state, at least the ones that are publicly traded. They're in different states and different regions of the US. And so that's the name of this ETF. Its ticker moniker MSOS stands for multi-state operators. And so what we can see is this is down a Great Depression level decline of 85% from its all-time highs. Now, I will say I started buying in probably around spring of 2021. At this time, there was a lot of false hope that Democrats would legalize marijuana for 420. How foolish that sounds looking back on it. But I probably became involved in these types of stocks in early March of 2021. And so while the market has declined about 82%, I've definitely been buying the dip, as it were. But let's take a look at the year-to-date chart on this. This was around 4 months ago, and that was the time frame where we just saw that clip. But this is when the announcement was made that cannabis may be rescheduled, and so we've seen MSOS go up a whopping 63% at that time, and at its peak, the stocks were up more than 88%, almost nearly 90%. Unfortunately, it is related in the short and intermediate run to government regulation. You never want too many variables when it comes to your investments. And so that's definitely a risk factor here. So let's move forward. We're going to take a look at our first stock of the day for top marijuana stocks in 2024. And this one is a little bit of a sleeper. Yes, the company that sells supplies and seeds for your grandmother's begonia flower plot outside her front porch in her planter boxes. So Scotts Miracle-Gro, a materials company that sells fertilizer, mulch, seeds, and other gardening accessories. Little known fact, Scotts Miracle-Gro, ticker symbol SMG, also owns a company under it named Hawthorne, and Hawthorne is one of the biggest producers of hydroponic marijuana growing equipment. What we can see here over the last year is that we had a big 1 day drop. Gaps always fill. Gaps always fill. But some of the relevant news, let's see what we can see. So they beat earnings and stock went down, maybe because of guidance. Stock went up 11%. Some analysts on Wall Street, Truist, upgraded the stock to buy. Scotts Miracle-Gro shares drop sharply after cannabis grow equipment Hawthorne down 19% that day. We got to look at this. So the unit weighed on profit. So they had some built up inventory that they couldn't get rid of. But we're going to learn more about that in a second. So down 20% on that day. And then SMG shares jump as a tough fiscal 23 comes to a close, up 18% in that day. Really a lot of volatility. This is, in fact, a smaller cap stock. And then another analyst increases their price target up 4.26% that day. So the stock's up a modest 10.6% over the last year. Let's learn a little bit more about the reporting segment of Scotts Miracle-Gro Hawthorne over here. And so I'll ask you to like the video and subscribe to the channel as we're moving right along. But Scotts Miracle-Gro struggling. Hawthorne seeks marijuana merger and acquisition deals. This is from MJ Biz Daily. This is a pretty reliable place for cannabis investors to get news and information. This is a recent report just about 3 weeks ago, mid-December of 23. And so what we can see here is we're going to do a quick read along together. Scotts Miracle-Gro's audacious $1.7 billion foray into the marijuana business over the past decade is a sensitive topic for the father-son team whose family helped build this lawn and garden giant. Scotts CEO Jim Hagedorn told MJ Biz Daily that hundreds of layoffs and debt saddling the Ohio company's cannabis subsidiary, Hawthorne Garden & Co., almost took Scotts down. Now, Jim and his son Chris, who is Hawthorne's GM, are mapping out a strategy, a change in strategy rather, for the cannabis cultivation supplies company, hydroponic grow equipment. The two hope to transform Hawthorne into a standalone marijuana juggernaut. And they're ready to do some deal making with potential partners, including cannabis companies, other cannabis companies. That's a big change. Chris could have sold Hawthorne to an interested buyer who approached the company's chief officer at MJ Biz Con 2020 in Las Vegas. And my response was, just tell them to go F themselves. We're not for sale. So that's all we need to know about the level of conviction in the cannabis space from Scotts Miracle-Gro, a great materials company in the United States. Pretty strong track record on a great American company. So that's one of the first stocks we're considering today, and we're going to take a look at it together. But I just wanted to check in real quick. Different groups are expecting growth in the marijuana industry at a CAGR of around 14%. I have other Marijuana Biz Daily put that number at about 12.8% over the next 5, 6, 7 years. Someone has a cute projected CAGR of 14.20%. And so just to get an idea about some of the growth in this nascent industry. But let's get into Scotts Miracle-Gro over here on Qualtrum. Qualtrum is a suite of software I pay for to look at stocks, but not one I'm affiliated with. I'm going to leave the link for Qualtrum in the description below. But let's get into this. So looking at Scotts Miracle-Gro, my top performing stock for the day, again, couldn't have planned it. This is, in fact, a small to mid cap stock. It has a forward PE of 21. They have a really healthy free cash flow yield of 12.3%. We can see that they have some cash, but they have quite a bit of debt. And they're paying a dividend yield of 4.3%. It doesn't appear to be safe just at the moment. So we're going to have to see them make some moves. Let's get down into these metrics so we can analyze Scotts Miracle-Gro effectively. Growing at around 2 to 5%. This is a cyclical. Materials is a cyclical sector, and gardening obviously is cyclical as well. We are looking on the year chart. Macroeconomics probably can affect material stock as well. In fact, I'm sure that they do because of different input components. But over the last 10 years, the company's grown at about 2.3%, but in the last 5 years, they've had an acceleration to nearly 6%. So we're going to keep all these numbers in mind. We're going to do a DCF on this company. I'll insert those results in the screen after I've added them in post-production and editing. So that revenue is up and to the right, looks good. Free cash flow, let's see if they're doing anything naughty with stock-based compensation. Great guys, being very reasonable. So looking at stock-based adjusted free cash flow, it's up and to the right. Pretty choppy. It's a cyclical, so you got to understand that comes with the territory, but free cash flow growing nicely. For the most part, that chart looks pretty good. So that passes the test for me. We're going to also look on Scotts Miracle-Gro at earnings per share. So he said, Hawthorne has almost brought the company down, but they're doubling down. Love to hear that conviction. But earnings per share had been going up and to the right and are having some challenges. I don't think those will be forever. Cash and debt looks pretty ugly, I'll be honest. So that's not as great, to be frank. But with interest rates projected to come down in 2024, that will weigh less heavily on a stock. So looking at dividends, although their payout ratio is a little messed up, we've got a nice 4.20% 10-year dividend growth rate. And it looks like they've paid special dividends in the past, which can be a separate catalyst. But over the last 10 years, we can see dividends growing nicely. And so this would be a decent rating from me. Even though the dividend's not safe, they seem to be very committed to it, and they've never cut it before. So that's a good sign. Shares outstanding, they're going down. Respectably. So that is something that I like to see. When it comes to ratios, a median over about the last 10 years is probably around 15.3%. So that's pretty good returns on their capital. And then looking at relative PE valuation over the last 10 years, company's trading at the bottom range of their PE ratio. That is awesome. So I'm very satisfied to see that. We will be rolling in. What I've come up with as their fair value estimate here on this screen. You've just seen it. I've added it here in the last, say, about 45 seconds as we're moving on to stock number 2 today. I'll ask you to like the video and subscribe to the channel. Let's move right over to another company, Curaleaf. Curaleaf, this is an interesting one. This is an MSO. This is a stock that is, it's been around for a little bit longer and got in before the 2021 bull market. So they're down just 46% from all-time highs. The max drawdown on Curaleaf was 73%, which is less than others. And looking at how they've bounced since that announcement, we can see that the stock is up 12% over the last year, but since that announcement is up over 65%. So moving forward, one thing to know about Curaleaf is they have a chairman of their board whose name is Boris Johnson, I believe it is. He's an interesting guy with some connections to Europe and even Russia. And so Boris Johnson actually helped to set up the Russian stock market in 1995, rather. And so Curaleaf is interesting. It's an American MSO, but they also have some revenue that's coming in from Europe. And so I thought it would be cool to take a look at the status of marijuana legalization within the EU, as Curaleaf does have EU and European Union exposure for cannabis sales. So Germany is set to make cannabis legal. Where's the rest of Europe stand on marijuana use? Mixed bag, but a little bit more progress than in the US, I would say, as they have entire nations legalizing marijuana. Obviously, Amsterdam was where this all started. So different European countries are pushing to legalize weed, but the UE is not on board, probably because of treaties with the United States. So we need to get our act right. So moving forward, we are over here on Qualtrim again. We're looking at Curaleaf. Let's look at the different facts and figures that are important on this. A note on MSOs: they have to trade on the Canadian Stock Exchange. So Qualtrim doesn't have all of this data available, but that's all right. We can get heads or tails of it looking at what we have available to us here. And so looking at revenue growth on Curaleaf, 77% over the last 5 years. Um, this is probably more normalized. Getting rid of this and maybe getting rid of this. It's probably about a 35% revenue growth. So hyper growth stock. This will be a small cap stock as well. So it's a small cap growth stock. Having problems with free cash flow. Don't prefer what they're doing with stock based comp. I don't prefer it. So let's see if let's go to a quarterly view on free cash flow. Okay, so this is going to be important. So $23 million in free cash flow, 15 million, 22 million. Keep these numbers in mind, that range of around 20 million in free cash flow, despite having a 70% tax rate because of the IRS Rule 280E, where MSOs cannot deduct taxes. Again, they pay about 70 to 80% in taxes. So despite that, while other corporations pay 20% in taxes, they're paying 80, and they're still able at times to eke out $25 million in free cash flow. So keep that in mind. Again, what I'm going to do is I'm going to project that multiple companies in Europe legalized marijuana, and/or the U.S. reschedules cannabis from 3 to 1, and/or ultimately 50 states have medical cannabis and 37 states have legal cannabis. I'm going to be making some conservative projections with some free cash flow estimates anchored around this 25 that they've been able to do under these austere conditions. I'm going to be attempting to sort of make a projection of future free cash flows. So keep that in mind. Now, for our next metric, we can see that they are struggling hard with earnings per share. At this point, this is a speculative investment. And I guess, that comes to circle of competence. So I have some experience in politics, not like a useless political science degree. Like, I used to work professionally and in a volunteer capacity for different political causes for a decade. And so one thing I know about America is, we value our rights: life, liberty, and the pursuit of happiness. All men and women are created equal. And America always strives to advance those ideals, to cement the gains of our freedom. And we don't give freedom back, we push our freedom forward. And so these rules need to change. 280E needs to go. This needs to be Schedule 1 or descheduled. We need national legalization. But I am betting that it will happen. And that's because of my belief that I have an understanding of the political system in the United States. So, as far as your confidence level in that, you have to make your own decisions. Looking at cash and debt, it looks okay. Looks fine. They're diluting shareholders, but they're diluting shareholders less than other MSOs. They don't have access to tax write-offs, or in some cases traditional banking. So I'm not going to say that I give them a pass, but I do understand what's going on. Some real improvement here on returns on capital employed. So they've been very negative at times, but they've been able to get it up to as much as 6%. And so that's an improvement. And look at profit margin. Not great. All right. That's what we know. So lastly, we have an interesting one, a curveball. So this is IIRP, or Innovative Industrial Properties, a REIT, a United States REIT that is the landlord for medical cannabis companies. So they rent the grow facilities and possibly some of the storefronts for medical only cannabis. And so this is one that is much safer from regulation. I'm sure that they don't pay an 80% tax rate. They're simply the landlord for medical marijuana, which since the Obama administration has had a hands-off approach from the feds. So they're up 420% over the last 5 or so years, or over the last 8 or so years. And looking over the last year, IIRP is down 5.6%. So that could be something that's interesting. But there were some options taken out on IIRP, went up 7% on that day. So this is one that's interesting. So from its lowest point, the stock is up 49%, 48%. And so why would this be an interesting investment into marijuana? So just like Scotts Miracle-Gro, they say when people are mining for gold, sell picks and shovels, right? And so a REIT that rents space for medical cannabis companies, why might that be good in 2024 and beyond? We heard from the chairman of the Federal Reserve that they're anticipating cutting rates several times in 2024. And so when interest rates are cut, you have to ask yourself how to invest. And you shouldn't base much on macroeconomics, but it can be a consideration. And so what we can see here is that when it comes to REITs, they're killed by interest rates. But when interest rates are falling, dependable regular income from investments become harder to find. This benefits high quality real estate investment trusts, or REITs. Strictly speaking, REITs are not fixed income securities. Their dividends are not predetermined, but are based on income generated from real estate. Still, in a general sense, they are income securities and do trade like income securities. You can usually count on high yielding REITs moving up when rates are moving down. And so we've seen that priced in a little bit early. Let's get over here to Qualtrim and see what we can see on IIRP, Innovative Industrial Properties, Inc. And so this is a REIT. This is one that I don't know how to value. The value is derived from AFFO. But let's see if there's anything relevant that we can determine. So they pay a huge dividend of 7.2%. It's over 100% payout ratio, which means they're either taking debt or issuing shares to get that. Although the issuance of shares is not detrimental to REITs. And so just something to be aware of. I need to learn more about this topic. With that being said, let's look at their revenue. Similar revenue as growth on MSOs, actually. This seems to be very correlated on the top line, probably about a 35% revenue growth. Looking at free cash flow, let's see. So good, they're doing a good job not rating the coffers with stock-based adjusted free cash flow. And so they've recently been able to put up some substantial numbers in free cash flow as they're not penalized with 280E. So that looks okay. And again, cash flow is not necessarily the predominant way that REITs are valued. It's AFFO. So earning per shares are going up. That's cool. Dividends, have they ever been cut? No, they haven't. They're growing aggressively, too aggressively. Not sure. Ratios, return on capital employed is going up, and it's not just a 1-year thing. So that looks, that looks positive. Again, not fully aware of how relevant this is when it comes to REITs. And then issuing shares, that's a standard thing. One other item of note, we had an insider buy $100,000 of shares at $98, currently trading at around $96. So executives only buy company stock when they feel the price is going to go up. So something to keep in mind there. Well, that's it. I hope that you enjoyed today's video. Make sure that you like and subscribe on the way out and turn those bells on, the bell notification on. I'm going to get the second part of this video up where we're going to be diving into some of the even higher quality US MSOs, as well as some other interesting ancillary businesses benefited by the trend in marijuana normalization here in the United States. Thanks so much for watching. See you on the next one.